Welcome to Libertex. Gold prices have been on a downtrend since touching all-time highs back in August of 2020. The trend since the start of the year has been disappointingly bearish, with gold trading sideways to the downside. Is gold oversold at this point? Could the area that gold is sitting at to start March be the bottom to set up a strong trade? Stay until the end of this gold analysis update for March 2021, as we'll be breaking down both the gold technical analysis and the fundamentals to go along with it for a complete overview to trade gold stronger throughout the month of March. So without further ado, let's get started. Gold managed to shoot past $2,000 and set record highs, coming to $2,067 back in August of 2020. Since then, gold has been on a month-to-month downtrend. Traditionally, gold trades inversely to the US dollar, so when there is inflation or economic uncertainty, gold typically enjoys a predictable raise. Yet while this has been the case throughout the past months with some of the other safe haven metals like silver and copper, gold has been mostly left out of the exciting price momentum and has been quite disappointing for traders who hope to see gold make a comeback with the ongoing economic developments. Such developments, namely inflation tied to the US stimulus, jobs reports, and PMI data, have so far only ushered in mild movements for the gold prices. Each of these indicators will be updated this month, with fresh PMI and jobs data coming soon. Perhaps the most exciting event will be that the stimulus deal will be likely voted on by the US Senate soon. Democrats are aiming to get the relief bill signed by March 14th. Such a deal will increase inflation and could potentially shake the newly found footing the US dollar has managed to support going into the first week of March. This will likely influence the price of gold, especially if the market is in a place where gold is oversold. Another development aside from the stimulus is the softening of US Treasury yields to start March, which could help gold prices. When US Treasury yields are high, investors are less incentivized to buy gold as the opportunity cost increases without return. Furthermore, while these developments, namely the stimulus and economic relief bill, plus the ongoing developments to bond yields, have the potential to bring gold prices out of the downtrend and back into the green, this is likely a short to medium-term effect. As the world begins to normalize, as more and more get vaccinated, and as the shutdowns come to an end, there will be less fear in the market to hedge against with gold. Let's jump into the technical chart for gold to see where we can possibly go throughout March and beyond, and what levels we need to be watching out for. Alright, we are now in the Libertex terminal looking at the chart for gold, and as you can see, gold has made some incredible moves throughout the summer, but has been trending to the downside to where we are currently in the mid 1720s. Interestingly, if we go back to the 5-year and compare previous years, gold has been actually on an uptrend. And if we just examine the new year, it has been trading sideways to the downside, making gold a bit of a confusing asset to trade. So let's just jump back to the 3-month. And as we can see for March, there's a critical level of support here at right around 1759, 1760. Which was broken and then brought prices down to where we are currently at, testing this retracement zone between 1787 and 1711. If this trend continues in a bearish direction, gold traders should keep their eye on the 1711 trading level found here, which is a Fibonacci level of support. And if gold doesn't rebound at this level, it could fall back to 1704. And if that move is not sustained, we could see the price of gold plummet back to the April 2020 level of 1679. In a bullish case scenario for March, gold will need to hold above 1723. If this is accomplished, the next level of resistance gold will likely encounter can be found right around the 1759, 1760 level before gaining the momentum to climb back up to the 1787 level. But support beyond this level will likely require positive and accelerated developments regarding the stimulus, but the current uncertainty could result in more sideways trading for gold. That said, gold does appear to be oversold on the RSI, which could be an indicator that it is primed for a bounce back to the upside. Plus, we are looking at 6-month lows at the moment. A lot will hinge on the current levels of support and the broader developments to the economy. What are your thoughts on trading gold this March and into 2021? Will you be adding exposure to gold or looking to other assets? Let us know your thoughts in the comments to join the conversation with our analysts, and if you haven't already, we'd highly appreciate it if you'd like and subscribe to our channel. Your support enables us to continue making content about gold and other market developments, and Libertex is one of the best platforms to easily trade gold, as well as other metals, cryptocurrencies, forex pairs, and the top stocks. Simply head to Libertex.com to register an account in seconds. We'd like to thank you for watching and wish you a great month in the markets.